3-moving average cross is essentially a development of the 2-moving average cross. The reason for the third moving average to be implemented in strategy is because those of you who watched or are familiar with the 2-moving average cross, range is a problem. It's not a good range system. It's highly useful as a trend system. In fact, it's a fantastic trend system, but as a range system, it is a nightmare. And most of us who want to simplify our lives want to avoid nightmares, particularly in trading. So what we do first, let's start here. Let's grab a moving average. Okay, so we're going to need 3. The fastest will be green, the slowest red, and in the middle we'll have a yellow. The colors will certainly be self-explanatory. Just a second. We'll go 200, 150. Red is the slowest, 200. In terms of simple, apply to close, open, these are obviously up to you. These can be toyed with. Everyone has theories as to which works better and why, but actually I'm going to go with orange instead of yellow just for the sake of visibility. I do like to work with white charts, black charts, though yellow would be perfect, but on a white chart it can be difficult to see. Green. Now we've got our fastest chart. So the theory is this, as we examine this a little further. We want, if we see green, top to bottom, green, orange, red, we're in a buy. If we see top to bottom now, red, orange, green, we're in a sell. If they are in any way intermixed, if that or those two orders do not exist, we're out of the market. And you'll see here, as we take a look, you will see, let me do this, let me shrink it a touch so we get a really nice look. Okay, so historically speaking, let's start left to right. As soon as we are in this area, orange, green, red, nothing can be done. Now we're green, red, orange, still nothing can be done. Remember the order. We want orange it to be in the middle, and then red to be up top or on the bottom. So here we have, do we ever finally, here we finally break. At this point, orange is crossed above red, and green is clearly above the 2. So at that point, we're in this area. We have a nice run. What happens? Green crosses below orange, and all of a sudden we have to exit the trade. Because why? Because the order has been broken. Carry on again. We catch a little buy here. Not a lot doing in either direction. Eventually things do move north. Green does escape above. We get another opportunity. Again, we get a cross below, gets us out, another cross above, and look at this run here. This is a fantastic run. To the south, how does it work? Okay, here we're out because of the issue with the direction of moving averages. Here, finally, at this point here, we break into a sell, and we certainly have room to move. So you can see historically, if we will just grab another area at random, it looks like up here we saw a nice run. Finally, at this point, we're in a sell mode, and this could be essentially a trade that a ton of money could be pulled out of the market. We get above here, that confuses us, but again, another cross to the south. Very simple trade strategy. Generally, that third moving average will keep you out of range, which is essential with a trend system. I'm going to implement a handful of trend, of range, of counter trend approaches, but this, if you're looking for a simple system to try to work with getting started, this is certainly one worth giving some time.